Hi everyone, Paul Stewart here from Segmented Solutions. Welcome to part 2 of our 4-part SSAS Planning Masterclass. In this video we'll cover SSAS lending and borrowing, as we know these are the key areas people want to know about when discussing their SSAS pension. However, if you want a free SSAS consultation that'll customize your SSAS planning and save you loads in tax, there's a link in the description below where you can book a free call directly with me. Please make sure you watch all 4 videos before we speak, as this makes the call far more productive and saves us both loads of time. Don't forget to like, share and subscribe so you'll not miss out on any new videos, such as our QNUPS Masterclass, which will contain a whole raft of amazing tax planning ideas that have saved entrepreneurs millions of pounds in corporation tax, capital gains tax and inheritance tax. So here we go, part 2 of 4 of everything you need to know about self-administered pension schemes. Thank you. Okay, so here's part 2 of your SSAS Planning Masterclass. This time we're going to look at issues like lending and borrowing. Again, Segmented Solutions are available to provide any technical support that you might need. So without further ado, part 2 of your SSAS Planning Masterclass. Okay, so as far as the SSAS is concerned, the loan is actually an investment. It's wanting to charge interest, which gives it a return on its money. And the higher the interest, the bigger the return. It doesn't pay tax on the interest charged, although if you're charging interest to a company, then that company will get tax relief. So here we go. Loans to unconnected parties are unrestricted. Obviously, you need to establish that who you're lending the money to is above board and that everything is safe and secure, but there's no formal HMRC restrictions on monies that can be loaned out. If you're lending money to the sponsoring employer, and this is one of the big things people do want to know about, you're limited to being able to borrow as a company 50% of the assets within the SSAS. The loan must be secured on an allowable asset, and I say allowable because you can't have it secured on something which is a taxable asset, for example, residential property or fixtures and fittings and so on and so forth. So again, you've got to have security of the right type. The loan must be on a repayment basis over a period of 5 years or less, and these payments need to be made. And also the loan must be used to benefit the sponsoring employer's trade. It can't be money which is just put into the sponsoring employer for no particular reason. And there have been cases where HMRC have asked to see where the money's gone and what it's been spent on to confirm that it was for the sponsoring employer's trade. Now, loans and loan rules must comply throughout the whole term of the loan. And in terms of interest, if you're paying interest and your company is not very rich, then you want to charge the least amount of interest possible, and 1% over base at the moment is a very nice low interest rate. However, if you're making lots of profits, you actually want to charge a lot of money, and you want to actually charge what is a commercial rate to the sponsoring employer. Any missed payments that the sponsoring employer doesn't make back into the SSAS will be defined as unauthorised payments and will be taxed at 55%. So you've got to be confident that the loan payments can be met. The loan can be renewed for a further 5-year term, but that can only be done the once. The interest is a business expense for the sponsoring employer, so it does get tax relief, and the SSAS pays no tax on the interest earned. So as an investment for your pension, it's actually a good way of siphoning profits out of your sponsoring employer back into your pension scheme, which is ultimately money for yourself rather than for HMRC. So apart from loans and loan backs, people who get involved with SSASs really want to get their head around borrowing. How much can the SSAS borrow to invest in things? One of the classic investments is to buy property. How big a mortgage can your SSAS get? So we're going to spend some time looking at this. First comment is that only commercial property is allowed within the SSAS unless you do some further advanced planning. I'm pausing at this point because it is possible, and that's all part of our consultation process. So if you're going for a commercial mortgage, the size of the loan, the borrowing, can't exceed 50% of the SSAS's assets before the borrowing was arranged. And we'll go through a case study in a minute just to make sure you've got that through your brains. Another very important issue is where VAT is charged on the purchase, this 50% limit includes the VAT payment as well. And again, we'll demonstrate that in some figures in a minute. And any new borrowing needs to take into account all existing borrowing when calculating the 50% limit. So here we go, quick case study. We've got some borrowing. We have a SSAS here with 500,000 of cash, which has come in from a previous pension transfer. And the maximum borrowing that the SSAS is allowed to undertake is an additional 50%, so that's 250,000. So ignoring stamp duty and legal fees and all of those things, just pretending they don't exist for a moment, the maximum purchase price for a property without VAT, in this case, would be the 750,000. However, if the property were subject to VAT, and a lot of commercial properties are, then the purchase price, the maximum purchase price, would only be 625,000 because there is 125,000 of VAT that's payable on the purchase. And when you add the two together, that's your entire pot spent. I know that you can claim the VAT back afterwards, but at the beginning you need to know what your budget is for buying your property. Couple of notes on VAT. A SSAS as a pensions entity can be VAT registered and it has various cash flow benefits, and you need to take advice properly. For example, if there's an option to tax on the property and at the same time there's no connection between the buyer and no connection between the buyer and the seller and the SSAS, they're all independent parties, then the purchase can be carried out as a transfer of going concern and no VAT is paid on the purchase. Again, I'm stressing it really heavily here, always seek advice on VAT. And remember, Google is not a qualified VAT expert, although if you do need assistance, we have access to a VAT specialist at this end. Okay, so here's a quick case study where the SSAS is buying a property for 625,000 and there's VAT due. Starts off with 750,000 within the SSAS, and again I'm just ignoring the stamp duty and the legal fees and all the ancillary bits and pieces to keep this simple and straightforward. Purchase price of 625 is paid, £125,000 of VAT is paid. It is also reclaimed later on, but for now it's paid. And the SSAS assets at the end of the day are the property worth 625,000, a loan of 250,000 and £125,000 in cash. The net assets of the SSAS are still 500,000 and therefore the loan limit is still 250,000 and so no more borrowing is allowed. If you are wanting to establish a SSAS and make use of loanbacks to your company, or you wish to get involved with buying commercial or residential property, then first thing is to establish a SSAS. And if you go to segmentedsolutions.co.uk/SSAS, you'll be given all the 10 steps with all the documents that you need to download. And if you have any questions, then you can email us at sas@segmentedsolutions.co.uk. Right, okay, so the next part, part 3, we'll be talking about SSAS investments, and this will include property in more detail and of course buying shares. Don't forget the link below where you can book a free SSAS tax consultation. Click and book yourself in. We look forward to speaking with you soon. Thank you very much.